On the trading floor of the New York Stock Exchange, who do I find? Mr. Wonderful, of course, but he is also chairman of an ETF company. It's great to see you here, Kevin O'Leary.
Great to be here, thank you very much.
And we're going to talk first about the O-Shares ETF investment firm that you are chairman of. You're actually celebrating a one-year anniversary of an ETF, and just for clarification, for those who don't do this every day, it's an exchange-traded fund, an easy way to trade stocks. One-year anniversary up better than 10%, so nice job there.
Yes, we have beaten the market significantly because there's a new generation of ETF product, and I'm proud to be part of the industry, that creates rules-based investing. It's active management. In other words, you know the merits of a mutual fund run by a great manager. We can now take that same idea and create ETFs that do the same thing. At half the cost, more transparency, more liquidity, more tax efficiency. This is evolution of investing, and you're going to see a lot of funds flow into this asset class. OUSA is based on the idea of investing in high quality balance sheets. So we have rules. For example, if a company is using debt to either increase or maintain its dividend, I don't want to own it. Remember sales accruals at WorldCom? I don't want to own those either. And I like to test things like asset turnover and return on assets. If those are poor, I don't want to own it. So if you put 650 stocks from the stock exchange through those rules, you only find 142 good enough to be in OUSA. That's how you get a 9.9% outperformance.
Let's talk more about the business of ETFs, because you've actually filed to increase your ETF offerings. I mean, you're somebody who looks at business ideas all the time. Why is it a good, smart business? Because I'll raise this right away. It's a competitive business. I mean, you're really going up against a lot of big providers that have done this for a while.
Yes, you're right, and that's a very good observation. It's brutally competitive, perhaps the most competitive space in financial services. And that's why the only way you're going to get any shelf space or market share is through innovation. The only reason OUSA has done so well this year in AUM growth, assets under management, is that it's unique, it's different. The FTSE Russell Index we created together with FTSE Russell, there's nothing like it. And as a result, it's outperformed. If you're going to get any market share at all, you have to innovate. If you just bring another Me Too ETF, you're not going to get any shelf space at all. That's one element. The other is, if you're 25 years old, you haven't heard of any of the financial brands we're talking about, and that's where I have a huge advantage. I speak to 7.2 millennials every week on Shark Tank. They know me as an investor, and I'm going to speak to them about this whole new asset class. For millennials, it's a wide open market, and even though you're a really big firm with billions under asset, you're no better off than I am. We all have to go and compete together. I think I'm going to do very well there.
Well, you make a good point about your celebrity, and also the millennials we know have been slow to come to the stock market. I mean, it's just not on the top of the to-do list for them.
Well, here's the reason ETFs are going to do very well for them. Let's say you're a millennial and you're making your first job, you're $60,000 a year, you want to save 10% of it each year and invest $6,000. You can't really take $600 a week and invest it in the stock market. You'll get no diversification, but you can do it with an ETF. So when I go around the country talking to millennials about investing, I talk about using ETFs to build long-term portfolios, because they can put $60, $100, $200 in a week into an ETF. They can trade it online, they can start building their portfolios, and I tell them something my mother taught me: never spend the principal, just the dividends.
What is the biggest misunderstanding of investing that millennials have from the people that you've spoken with?
You know, they feel that it's very complex to get into the stock and bond market, and we as an industry have to make it easier to understand. You know, my daughter's 23, and I've been working with her as she's building up her portfolio, and she's starting to understand the merits of long-term investing. And I think what we've done so poorly as a society in America is we teach our kids about everything: geography, math, reading, sex education, you name it, and we don't tell them what debt is, we don't tell them what a stock is, we don't explain a bond to them. Why aren't we doing that when they're 10, 12, 15 years old? That's what we have to change. I'm really big into financial literacy and getting that going, but I think ETFs are going to be a very big asset class in solving millennials' problems.
So if a millennial comes up to you, or anyone else for that matter, and says, you know, I don't have a lot of money, I have this business idea, do I invest my money in business or do I put it in an ETF? What do you say?
I say the key to life is diversification. And so when you're a young entrepreneur, it's extremely hard not to take every dime you have and put it into your business. But a rule of life is, when you are gifted something, when you have a summer job, when you first get employed, take 10% of your paycheck every week and invest it for the long term, because that's what's going to save your hiney 30 years from now. You know, that's the key, and that's why the ETF industry that we're creating together and innovating together is going to be so important for millennials. I bet you the asset class of actively managed ETFs is going to grow 20% year over year, every year for the next decade. It is going to be the fastest growing asset class in financial services.
Interesting. Now, are you having as much fun doing this as you are on Shark Tank?
I love Shark Tank, and I've got, you know, so many portfolio companies now. An interesting observation I'll make after 7 years of doing the show, not some of my returns, all of my returns have come from companies either owned or run by women. So I'm now, when I'm given an opportunity.
Yes, can I just give a shout out to the women?
I'm not trying to start, yes you can, but I'm not trying to start, you know, gender warfare. I would invest in a goat if I could get a return. But frankly, women are better time managers for small cap companies. That's what I've learned. So if I have a same company opportunity, one run by a man, run by a woman, I'm going to choose the woman because I have had better experience on return of capital.
Well, isn't it also they multitask better? I mean, let's just face it, women are better at multitasking.
Well, you're right. There's an old adage, if you want something done, give it to a busy mother.
Exactly. So at this point, how do you see businesses and business planning evolving? I mean, as you mentioned, you've done this show for a while. People have gotten a little bit more sophisticated, haven't they? Not everyone's a cockroach anymore.
No, you're right. And this year, we're in the middle of shooting season 8. What you're going to see is very large deals, multi-million-dollar deals, new structures such as venture debt. You're going to see convertible debentures. You're going to see new preference share structures. All kinds of new ways of doing things, and the old classic royalty deal, which I'm famous for creating. Thank you very much. That's why they call me Mr. Wonderful. But the point is, because the deals are so large and complex, we're all learning with Shark Tank. America's learning business through Shark Tank, and Shark Tank itself is evolving. The platform is so powerful now, it can take customer acquisition cost to zero for any company, and so just getting on Shark Tank's hard. There's 100,000 applications this year. We'll probably shoot about 200, 250, and maybe 212 of those will air, and for those companies, the moon's the limit in terms of sales growth.
Can you pick one idea that was your favorite, or is that just too hard to do?
It is too hard to do, but I've taken basic products like cupcakes, and that company, they're now multimillionaires. Wicked Good Cupcakes used the Shark Tank platform to become the fastest growing cupcake brand in America. And I think about the complexity of deals like Honey Fund, run by another woman, Sarah Margolis, who's done a fantastic job. Took it from 50 million to 350 million in originations. That's a Shark Tank success. Groove Book, you know, husband and wife team, created by a woman who said, I've lost the photos off my iPhone, I want to have a catalog. That was sold to Shutterfly for $14.5 million a few months ago. So these innovations start on the Shark Tank platform, they grow with the investor, the shark that invests, and they've had tremendous outcomes.
Now, for your own business success, you're going to stick with the ETFs, or do you have something in the back of your head that we don't know about yet?
No, I've really found the ETF market fascinating, very competitive. Working with my partners at FTSE Russell is really invigorating. Working on new ideas on indexing, bringing out new products. We brought out Europe hedged, unhedged, Asia hedged, unhedged. So now if you want to buy Europe, you buy OEUR, and you've got British, Swiss, German, French companies in one ETF. My daughter loves that, and she buys it 50 cents hedged and 50% unhedged, which means she doesn't take currency risk.
Well, there's an applaud. I don't think it's for you, Mr. Wonderful, but they're applauding something here. I'm going to applaud for you. And I'm not going to let you go just yet, because I want to ask you something away from business. Let's just take a look at what's going on over here.
This is great.
Oh, it's somebody's birthday.
That's right.
That's nice. This is one nice thing about the New York Stock Exchange. It's a birthday, it's maybe somebody who's retiring or something. So maybe we'll get some cake later, but before that, I got to ask you this. Away from business, I read a couple of months ago, it sounded like you were toying with Canadian politics a little bit. I didn't see much since then, but are you still thinking about getting more involved politically?
You know, I'm an Irish citizen, I'm a Canadian citizen, so I'm always interested in investing in those countries, and I moved down to Boston back in '94. My kids were born there, so I have a huge vested interest in America. My interest in politics now is to try and get more efficiency in government. I think the way I look at politicians, they're my employees. I pay taxes everywhere. They're working for me, and I want better managers. So I've become a bit of an activist. I'm looking for less regulation. I'm looking for better transparency, and above all from my politicians, I want performance. I'm now using this giant social media platform I'm lucky enough to have to start calling out weakness in politicians. When I see a weak politician, I point out the mistakes they're making, and I try and encourage them gently to do a better job for me I'm their boss. They work for me. If they can't get the job done, I can't personally fire them, but I can make I work very hard to get them removed in the next election by backing maybe a politician I like better, or maybe doing it myself. That's the way I look at it.
So, in other words, still to come, more from you on that,
Sure.
maybe.
I'm active in politics now because I realize I've ignored it for a long time, and now I realize they're screwing up business. So I'm going to make sure I can get better politicians in better places.
So what do you think of the race now underway in the U.S.? Obviously, another reality star is on one side of the aisle, and we've got somebody who's been in government forever on the other side.
Right, and so I remember when they said about Ronald Reagan, why would we ever let an actor into the White House? And those were the best years I ever had in investing. He was a great president. I look at Ronald Reagan as an analogy to what's going on between Trump and Clinton. Here's my own take on it, without really endorsing any candidate. I don't think the old crusty brands are going to work. The Bush brand doesn't work anymore. The Kennedy brand doesn't work anymore in terms of getting someone elected. We don't like dynasties in America. So I don't think the Clinton brand means that much to a millennial. They don't remember it. But I think it's not going to help her get elected. She's going to have to come forward. And there's two things that are going to matter come this November. Who's going to keep me safe, and who is going to get me a job? So when this is all over, all this rhetoric and all the fighting between these two isn't going to matter. You better show me a great growth plan, some safety that I know I can walk in my own streets, but you're going to have to get those millennials jobs. And right now, the policies I see out of Trump on economics are starting to interest me. Lower taxes, reduction of regulations on small business mean a lot. Elimination of the estate tax, which makes no sense to a farmer. I don't get why we tax them twice in their lives. So I'm starting to see a pro-growth model there. I want to see what she's going to have to say later today. We'll see. But my bet is it's going to be the one that can get me a job that's going to win the presidency.
Oh, we should create our own jobs, though, right?
Well, of
Maybe
course.
we should send these two to you, and you can kind of analyze their business plan for America.
We've over-regulated small business. That's why it's so hard to start a business here in New York. It's so hard to do it in Massachusetts, so hard in California, so hard in Florida. You got to make it easier for somebody to say, I'm going to take a risk, create a job, and create jobs for other people. And that's what America was always the best for that. And now we've made it hard to do, and I blame politicians for that.
Kevin O'Leary, it's been great chatting with you. I'm going to end this, and I hope you won't take any offense when I say you're dead to me.
I take no offense at all. Thank you very much.
Take care.